Hey guys, good evening. This is Dave with Moneyology.com. Hope everyone is having a great day. Today is Wednesday, August 16th, and we're going to do a uranium market review. As you guys probably already know, we like to look at charts from a weekly standpoint. Why? Because we believe that removes most of the noise and gives a broader perspective of what's actually happening in a longer trend. And that's how we typically trade, and that's what we're going to look at today. Please do your due diligence in all of these investments before making any of these investments for yourself. Remember, this is your money, so please be prudent with it. All right, let's have a look. Global Uranium, URRE. So this is the ETF, and as you see here, it's been in a pretty sharp downtrend for the last 5 to 7 years. But this chart we're looking at since middle of 2012, and it's been in a nasty downtrend and broke out here in about November of 16. It rallied and had a really nice move. Found some resistance right below that 200 weekly moving average. And it's been a corrective pattern for well over 6 months, and we like this pattern because it represents if it's able to hold the previous point of breakout is very, very constructive for a longer term uptrend, because nothing goes straight up in a new trend. There's a lot of supply out there after such a nasty sell-off, so no surprise that it's corrected here, shaking out a lot of these weak cans. A lot of folks made money riding this wave from about 11 all the way to 20. So once we sell off, you want to see support here. We found support. We had built this bullish wedge. We broke out. Now we're consolidating in this corrective pattern here, and we're doing so right above that previous point of kind of breakout point above that 13 area. So we want to see this area hold when you look at on the shorter time frames, the daily and the hourly. There's a lot of support around the 13 to 1330 area. So and this week's not over, but you want to see it close strongly before these MACDs can circle and go back below zero. We think it will. Keep an eye on uranium in the next couple of days. But bottom line is, if you're a longer term trader, you want to buy this when the 15 area is broken to the upside to confirm the up move. But one thing that does remain clear is we are in an uptrend so long as this blue line here is not broken to the downside, and so far it's constructive. It's creating higher lows, and that's what you want to see. And again, 15 to the upside confirms that this is indeed a resumption of this uptrend that started in November of 16. Let's take a look at some of the names in the sector that we have liked in the past, and let's see how they're doing today. So Cameco, CCJ, largest name in the space. One thing that stands out here is, so you had, just like URRE, and no surprise since this is the largest name in that ETF. You've had this downtrend since 2014. Right here, you just can draw this line, and it broke out above this downtrend. Now it's retesting and consolidating through this bullish flag formation right above this trend line here, and so it's kind of like a cup and handle. You got this cup, you've got this bullish flag handle, and it broke out from this handle here, and now it's creating another bullish flag. So if you look at it on a very short-term frame, you might think, "Oh boy, this is correcting," but from a longer-term standpoint, it's a great move. Breakout, consolidation above the breakout zone here around 9, building a new base here, and no surprise that it's finding support around this area, and another bullish flag pattern right above the base here, and not coincidentally, this correction is on lower volume. So we want to see this confirmed with a breakout above that 10 area. If it breaks above 10, it also will coincide with RSI recapturing 50, and that's definitely what you want to see. So stay tuned on Cameco. Denison Mines, DNN. So this chart is similar to Cameco in that it's been in a nasty downtrend, broke out of this downtrend. Now it's bullish consolidation, bullish flag pattern, and it retraced, no surprise, it retraced this downtrend from the upside, and it's found support. Again, no surprise. Where's the support? Right above this 40 level where it built a base last time around. So there's a lot of support in this area. It broke out of this bullish flag pattern. Now it's consolidating in another bullish flag right above this breakout zone. Another mini cup and handle. And MACDs are slowly starting to curl above zero. You want to see this break higher, not roll back over. Volume is very low on this correction. So you want to see this break above 50 to confirm that this move is for real and not going to roll over back to this 40 zone. So not yet a buy, but above 50, it quickly becomes so. Your energy fuels, quadruple U as the ticker. This chart is also you had this downtrend here that it broke out of. And then it's kind of retested this downtrend from the upside, and now it's still consolidating around this base area. What I do like here is it kind of double bottomed here. I mean, it's not exactly the purest double bottom, but what I do like is that the RSI is building lower lows, or rather higher lows, and now it's consolidating right below this 50. And if you extend this downtrend here, where it basically is around that $2 level. So for us, a longer term trigger is that $2 price point with a straight shot towards 3, and we think eventually gets towards that 5 area in the not too distant future. Fission Uranium Corp, FCUUF. One of the better looking charts, believe it or not. It's when you look at it from afar, just this up and down move for the last couple of years, which is true. But what we do like is that this move from 40 level brought it above the 50 on the weekly RSI. Now it's fallen back, and it's finding support, preferably for the bulls, above this 50 zone. We believe that it's going to hold. This 52 area represents the daily and the weekly, the daily 50 and 200 EMA. So it's right above that. It's found some support. On a weekly level, there's also support with a 50 weekly moving average around 52. It's above the middle Bollinger Band of 50. So if this area holds, expect to see a test towards 70. Once that breaks out, look out above. Next on the list is Mega Uranium. This is one that we own. We own it because it's a shell company for Next Gen Energy, which we'll look at next. And basically, from a chart pattern perspective, we really like the upside here. So it broke out above this downtrend from 2014. It's had this bullish flag pattern here, and now it's consolidating after breaking out above this bullish flag pattern, right at that 13 to 14 area, and much to our liking, right above that 50 on the weekly RSI. We expect that support to hold, and our price target in the next 3 to 6 months is that 25 zone, but we wouldn't be surprised to see if 38 is hit at some point this year. So some significant upside in Mega Uranium. Next Gen Energy. This is one that's been basing after a breakout above this $2 zone, and it hasn't been able to really recapture that $3 area, but we think it's starting to get some legs underneath it, and it's going to make a run towards that 3 zone again, and we think that ultimately it's going to break out to the upside. But one thing that we don't like at this point is that the weekly MACDs are starting to curl below zero. So if it cannot create a positive move for the rest of the week, then this will create a shorter term corrective pattern where we might see a couple weeks of consolidation above that $2 area. But if Thursday and Friday show some strong price action, we might see this curl above zero and confirm an upward price movement in the stock. Sky Harbor Resources, SYHBF. Bottom line is above 30 to 32 cents. We like this stock. There's a lot of fundamental support behind the story. Cash flow index is moving in a positive direction, and it's consolidating here after a very nice move from 5 cents all the way towards 53. So no surprise to see some consolidative period, but there's some nice resource behind this company. And if uranium, or rather when uranium breaks to the upside, there's a lot of potential. Don't be surprised to see this well above $1 once uranium spot price decides to finally move higher. URRE, URG, similar price pattern to the uranium ETF, URRE. So broke out of this downtrend since 2014, had this bullish wedge pattern for several months in 2017, broke above that. Now it's consolidating here above that breakout zone around 60. You want to see this area hold, and you want to see 50 on the RSI recaptured. Until it does so, it's technically in a downtrend, but we believe that the uptrend is very much intact. And we do see a 90-cent price target being reached some point this year. Next on the list is Uranium Energy, UEC. It's had some pretty nasty down moves in the last couple of weeks, but bottom line is it's still in an uptrend here, so long as this area holds, and so far so good with this weekly hammer pattern. You want to see 150 retaken to the upside. I like the fact that we found support here in previous levels of support right there. Resistance here becomes support later on. So bottom line is no surprises finding support. We expect this to make a run towards $2 and eventually hit $3 at some point later on this year. Next on the list is Uranium Resources, URRE. Broke out of that bearish downtrend in late 16, early 17. Made a run towards 4. It's been in a bullish wedge consolidation. Broke out above that. Now it's consolidating right above that area, and so long as it stays above 125, we think that this is going to make a run towards 250 and a break above that. And that's when the explosive move towards $4 to $5 begins. Finally on our list, and potentially one of the best plays here based on simply charting standpoint, is Western Uranium, WSTRF. What we like about this is it's had a nasty correction here, or downtrend, frankly, since February, from all the way from 217 all the way back down to about 80 cents. It's found a base here. The MACDs are moving in a positive direction. The accumulation is starting to pick up very, very nicely. Money flow is in the positive territory. RSI is building momentum here, even as the price basically bases. For us, a break above $1 sends shares to back to about $2. And so there's some significant upside here in this stock, and one that you want to own should uranium break to the upside, as we expect it will in the coming weeks and months ahead. Bottom line is we like uranium, but it's still, this correction is not over until it's over. We see that it's finding some legs when we look at the daily and hourly charts. So we think the probability is increasing that we've seen the bottom, but obviously until we see some of these charts improve, there's no assurance of that. Bottom line is good luck with your trading, and please do follow us on StockTwits at Moneyology, Twitter at Moneyology, and please subscribe to our YouTube channel. You can find it at Moneyology as well. Please send us your feedback on YouTube, and if you want to see any particular charts or companies analyzed, feel free to send us a private message in any one of those social channels. Good luck with your trading, and have a great rest of the week.